was like, my voice is so loud, you probably can hear me anyway.
I can't hear anything.
Oh, really?
Yeah.
Oh, you're not plugged in?
No, I'm just kidding. I can hear you.
Oh, okay. Very nice.
We're on.
Okay.
Yeah.
What? Do you have the music for this thing?
I do, but I put that in after. So just like envision it in your head.
That's great.
Hey, what's going on, everybody? This is the HIG podcast. I'm Matt Pinnell, Matty P, known here around the office, and I'm here with my good friend Bronson Kaufusi.
What's going on, everybody?
What's up, Bronson? How you doing?
I'm doing good, thanks.
How was your last few days?
It was great. I was in Indianapolis at a private jet event, learning about the tax benefits and structures and all the things that take place in that for those type of investors that need that, and it was awesome.
Nice. Sounds like a lot of fun.
Yeah, saw a lot of planes, learned a ton. They had the top lawyer and CPA in the country there for private aviation, so it was incredible.
Do they have a trophy for that? How do they figure out the top CPA?
I think by how much work they do.
Oh, there's not like the CPA events.
They should have a trophy.
That would be pretty fun.
Yeah.
Did you hit any golf balls?
I got some golf balls from them, but I didn't hit any.
Well, I got a golf ball story for you.
Okay.
Took my oldest out to the driving range. I told this to you already, so you can just act surprised.
Wait, which? Oh, keep
All right,
going.
so I took
keep going.
Took my oldest son out to the driving range, and it's one of those moments where I'm not like a helicopter parent. I'm not like, do this, do that, try this, try that. But he asked me, "Hey, Dad, how can I stop slicing it as much?" In my very limited golf knowledge, I gave him a couple pointers. And then I just started hitting a couple golf balls, and then I heard this amazing hit, this crack, this. Oh. And I was like, oh, that sounded good. And I looked up, and I saw his ball flying through the air, and I noticed it looked different. I was like, what's going on with this ball? Can you hit the stuffing out of a golf ball, like a baseball? And then I realized that it wasn't a golf ball. I looked over, and he's holding my driver, but the top of the driver's gone. It's flying.
I know the feeling.
It's flying down the range, yeah.
I know the feeling. Yes, I do.
And I told him, I said, hey, listen, dude, it's okay. You know Bronson, right? He's done that like 3 or 4 times, so happens
true.
to everybody.
It's true. I only buy my my drivers from Costco now.
There you go.
Yeah.
Nice. All right. Well, without further ado, here we are with podcast number 2, and we have a very special treat today. We have a special guest, Jesse Yeats. Here, and I got to tell you, Mr. Jesse Yeats, the myth, the legend. I have to tell you a quick story about Jesse. A month or 2 ago, I set a goal, and Jesse doesn't know this, by the way, but I set a goal to get to the office before Jesse. And so Monday came, and I left early. I have a little bit of a drive. I'm like maybe 30 minutes away. I left pretty early, and I got here. It was like, I don't know, maybe like 7:45, and Jesse's here. So Tuesday, I'm like, all right, I'm going to leave earlier. So I left earlier on Tuesday. I got here at 7:30, and Jesse was here. And I'm like, holy crap. And I'm not kidding you. Wednesday, Thursday, did the same thing. I was here at I think one day I was here at like 6:45, and Jesse was here. But then on Friday, I got here, and it was like 6:30, and I finally beat Jesse. I'm like, all right, Jesse, I beat him. I beat him to the office. But it turns out he wasn't even coming into the office that day.
He came through the night, and then he left before he got.
He was in Kansas City visiting one of our properties.
Oh yeah, he did go.
I still haven't beat Jesse getting into the office. Anyway, that's my Jesse story.
I like that story.
Yeah, he's a good dude. He's a hard worker, and he's going to talk with you a little bit about, some of the fundamentals to investing. So let's have a round of applause here for Jesse.
Jesse Yeats, welcome to the podcast.
What can I say? I'm an early bird.
That's why you catch all the worms.
That's right. Gotta get those worms.
Jesse, do you want to give us like a quick little blurb about you and your background in the investing world and what you do at Harris Investment Group?
Oh, sure. Yeah, happy to. So currently I'm head of investor relations at Harris Investment Group. So that entails all things investors, everything investor facing I'm involved with, lead out on all of our capital raising and our marketing efforts. So it's a good time. We work with some pretty incredible investor partners. So being able to spend time with them is a lot of fun. I can't remember where we were. We were out of town and we were golfing somewhere, and I sent a video to my brother who's a golfer, and his response wasn't anything about the golfing. He was just like, do you even work? Like, is this work? He's like, this. You always send me these awesome, always at these, fun places, eating great food, hanging out with great people. Is this work? And I'm like, this is work, baby. This is work. So yeah, very, very blessed.
Did you tell me you planned it that way?
Yeah, it's so funny because, yeah, I was fortunate to know very, very early on that I wanted to be in investments, and that sounds really dry and kind of like hard to believe, but it's absolutely true. I think I traded my first stock when I was 12.
No way.
Oh yeah, I mean, I was.
You were dialed in.
Oh yeah, I mean, when I was 10 years old, I asked for a paper out for my mom for my birthday, so I could start working and so I could start playing in the markets. So yeah, awesome. I mean, every morning I was going through the newspaper, finding, and I was charting. I didn't have a computer. I would chart like different stocks I was following and like see where they were trending on paper. I'm like doing graph paper.
Oh my goodness!
Oh, yeah.
I did not know that. That makes sense though.
Yeah, I was obsessed. So anyway, yeah, my career, I've kind of gone into. I've spent some good time with young companies, with startups. I've had some time with different investment firms. Started my career with Morgan Stanley, the investment bank, and yeah, over time, launched my own private credit fund. And it was around that time where I met Jason Harris, and he opened my mind to all things real estate. And I learned, wow, on a net return basis, when you include the taxes, nothing touches it. And yeah, that kind of changed my perspective, and I realized I could make a lot more money working with Jason, raising capital in our space than elsewhere. So it was a really easy shift to make.
Oh, that's awesome, man! That's incredible. I love hearing that. Like, your background's incredible. I mean, that's.
Yeah, I guess I didn't go into too much detail, but yeah, it's been fun.
Man,
it's been a lot of fun.
Well, we're super grateful you're here with us today.
Yeah, I'm happy to jam with you.
I know, we're excited. We're going to be touching on a pretty important subject today. And because you came from, all the different, or all the other investment, from startups, private credit, and then got into real estate, you'll be able to answer these questions. And I'm so excited for everyone listening. So if there's a person who wants to get into real estate, right?
Yeah.
And they want to make that jump. Before they make that jump into real estate, we'll first go down the, I want to be the operator. I want to do the real estate investing and do all the things. What needs to take place in your mind?
Yeah, great question. Is this individual a non-accredited person?
Non-accredited.
Okay.
And just wanting to get into get into real estate.
Yeah. So to start off, we get this question all the time. Do I invest with you guys, or do I do my own real estate? Now, our firm was built on Jason Harris and the empire that he built, right? And so it would be disingenuous to say that investing in your own real estate isn't a great path, because it's the path he chose. It's a path that has been proven 1 billion times over that it works really well, right? Yeah. So we always suggest, if they have the ability to go do it and the bandwidth to go do it themselves, right? The nice thing about doing it yourself, you don't have to share your money with anyone, right? You make some good money, you don't have to share that profit with anybody.
Yeah.
But yeah, I guess there are some things that you'd probably want to make sure you're in a good situation before kind of taking that dive. You don't need, number one, you don't need to be the expert, right? It's in the doing of it that you're going to learn about it. So don't waste your time or spend too much time becoming an expert on paper. Just dive in, right? Don't waste time there.
I like that.
But you're right in that there are probably some things, number one, I mean, this is probably going to sound kind of Dave Ramsey-ish, but you can't, it's not smart to move into investments if you've got crazy debt, right?
Yes.
And debt is a loaded word. There's cheap debt, there's expensive debt. If you have credit card debt, for example.
Especially right now.
Oh my gosh. Yeah. You don't want to move into investments where you're seeking, 8, 10, 15, 20% returns if you're paying 25, 30% interest, right? It doesn't make any sense.
Yeah.
In fact, I'd seen a tweet before by Mark Cuban, and he was kind of giving day traders a hard time. I think this was kind of like peak Robinhood, post-COVID era, all that. And he said something to the effect of like, all these day traders seeking to make, 25% on their money, day trading. You want to make 25%? Pay off your credit card. Bam. You just saved 25%. You just made 25% on your money. It's absolutely true. So if you have that kind of debt, you got to, right the ship first. You got to get your house in order before you can take that plunge into investments generally. That's all investments. I mean, that's not just real estate.
Yeah.
So I would say number one, kind of get your house in order on the debt side, expensive debt specifically. I mean, you're going to, if you own a home, that's probably good debt.
Yeah.
If you, have a car that's, a need, and that's probably fine debt. Student loans, same kind of thing, right? Yeah. Education, that's viewed differently, but expensive debt, you got to get rid of that.
Yeah. That's great. Touch on, so I love that, right? Make sure everything's in order, emergency funds. I'm hearing that message from you.
Emergency fund for sure. Yeah. And there's a lot of different schools of thought on like what constitutes a good emergency fund. It's a very much individual thing, because living in the Midwest versus living in a big city, having two different yeah, exactly. You're going to have a totally different cost structure and lifestyle. And so that number is different for everyone. Yeah. But being able to have a few months, 6 months, 12 months, whatever that number is in terms of a reserve fund, an emergency fund, have that money stashed away in an account that, is a high yield or high interest account. Yeah. It's extremely important. And the reason why is because when you make an investment, especially an investment like in real estate, it's an illiquid investment.
Yeah,
your money's tied up. Your money's tied up in bricks, right? In foundation, where you can't in dirt. You can't easily access that money. So, in the downside scenario where there is a financial storm, you want to be able to weather it, right? And you got to have money to be able to do that. Yeah. And so, you don't want to over lever yourself and get yourself in a situation where you can't get yourself out of a bind. So got to make sure you don't have that high interest debt. You need to make sure you have a good emergency fund and good savings to kind of support your initiative. Yeah. And then going into real estate yourself, maybe that's buying a single family home to rent. Maybe you're house hacking, you're buying a duplex, you're living on one side, and the other side you're going to make available for someone else and rent that out. This might be kind of dumb and goes without being said, but you need to make sure you have the bandwidth for it.
That's important. Time is money.
Time is money. Yeah. And a lot of folks today, especially in American hustle culture, a lot of folks don't have that time, right? Because they're grinding at a job or at a company that they're starting, right? Yeah. So you got to be able to do that. The good news is that especially if you're house hacking, it doesn't and it shouldn't require a ton of work. Yeah. But some people just aren't wired for that. That's true. And so being able to manage a property, like you got to have a certain disposition for that, I guess. But it's a very easy thing to do. So I don't think this is like a tall order to have in terms of bandwidth, especially when you're just getting started. Yeah. But got to be able to manage it yourself. Yeah. So for a non-accredited person, I think making sure you kind of have those three things satisfied, I think you're in a great position to kind of dive in.
I love that. So Jesse touched on some huge points. Seriously, that's so great. So we have emergency funds, right? Making sure the house is in order. We have liquidity, right? Mm-hmm. You got to have cash available. And then bandwidth, which is money. Time is money. So that's for non-accredited and going into real estate themselves. So now let's go to an accredited investor, someone who's accredited and tied up with a job that demands a lot. Maybe you can touch on that.
Okay. Yeah. So if they're accredited, that allows them to work with groups like us.
What is accredited? Yeah.
Yeah. Accredited is, unfortunately, we treat it as synonymous with sophisticated. Mm-hmm. It means that from the SEC's perspective that they are able to bear larger risk because they are in a financial position of being able to afford greater risk. So in the event of a downside situation, they can weather that storm. This is all post, Great Depression, 1933 Securities Act, saying we need to protect investors, we need to protect the layman. How do we protect them? Well, we need to put barriers to high risk investments. And so because there isn't something today that where there's a test that you could say, hey, I'm financially fluent, I understand these concepts, I can underwrite risk decently. Because that doesn't exist, they've taken this easy approach of saying sophistication or knowledge equals money. So if you have money, then you know what you're doing, or simply that you're able to withstand greater risk because you have more financial strength. And so that's what accredited is. So there's a number of different tests you can satisfy to show that you're accredited. The most common one that we see is, if you make a couple $100,000 a year, then you can qualify. There's a specific definition that I won't outline, but yeah, if you're making a couple $100,000 a year and you have for the last couple of years, or if your net worth is over $1 million, excluding your primary residence, you can qualify. Those are probably the most common ways you can see if you're accredited. Yeah. But if you are, then that allows you to invest with private equity firms like ours.
Awesome.
And which our investment vehicles are private, they're illiquid. And so you can't invest today and then, down the road, within a month, give me a call and say, hey, Jesse, I need the money back.
Yeah.
Right.
Yeah.
I want to go buy a car and I need that money. And I would say, it's tied up in bricks, sir.
And dirt.
Yeah. It's tied up in dirt. So because of that, it's, you have to be accredited. You have to be able to have that liquidity, and you got to have the sophistication to make that investment. So for these folks that are accredited, I think the same thing still applies. So what, you're making a lot of money, you should still have the liquidity box checked that we talked about.
Yeah.
Having emergency fund, having savings, because again, if your money's tied up in real estate, you can't access it.
Yeah.
So you have you have an emergency come your way, or you want your money for some other reason, you can't get it.
Yeah.
With us, we run the syndication model where a few investors, handful of investors kind of come into a property. We also raise larger funds with many dozens of investors. Mm-hmm. And it's too complicated of a process to get that money out of those, these types of vehicles with that many investors. So we simply just make it easy and say, don't plan on it. It's an illiquid investment, and you can't access your money until we actually sell the asset.
Yeah.
Right. So I would say liquidity is kind of the name of the game. If you can check that box, you're accredited, and you can check that box that you have the liquidity reserves, then investing in an investment vehicle like ours, in real estate like ours, that can make sense for you.
Yeah, I think one thing to touch on the last point that you made earlier is bandwidth. When you're accredited and you don't have the bandwidth, and you want to get into real estate, you're kind of in a tough box, and that's kind of where I was, and I touched on that last time. Well, we're all done for today. Jesse, we appreciate you coming over here and talking. We could listen to you all day. You got a great voice, Jesse.
Do I?
Yeah. I could listen to you all day.
Oh, man. Your flattery.
Man.
Can't handle it.
Oh, man.
Thank you, Bronson.
Well, thank you.
Thank you guys for listening to this podcast today. We love to answer any questions that you have. So send us an email, contact@harrisinvestmentgroup.com. And in the subject line, just put HIG podcast, and we will be sure to field every question that we get. We'll tune in. We'll tune into you next time.
Or they'll tune in to us.
You'll tune into us. That's right.
Yeah.
See, Jesse always has the answers.
Eyes them blaze now, journey through celestial ways. Wow.